Mark Connolly and Rick Ray are registered representatives and financial advisors with Park Avenue Securities, a registered broker deal and investment advisor. The information you will hear on this show is for information purposes only, and individual situations vary. The information should be relied upon only when coordinated with individual professional advice.
Hey now, you're an all-star. Get your game on, go play. Hey now, you're a rock star. Get the show on, get paid.
And we are back. You're with Big Money, Big Daddy, AM 1130. Again, we got a week to go for Thanksgiving, so I'm hoping everybody here is looking forward to that. With that being said, I'm going to kind of finish our show today with talking about the solution. So up until this point, if you've heard kind of the few topics before, I talked about that there is a lot that has transpired over the past week, right? Obviously, that comes down to kind of who our new president-elect is, Donald Trump, and really what that means is things are going to change, hopefully for the good for everyone in this country as well as abroad. But one thing that should not change is the foundation and principles in which you invest. So that's what I'm going to talk about. Again, you're listening to Big Money, Big Daddy. This is Justin Makris. If you've got any questions, you can call us at 713-826-0426, or you can text us at text daddy to 72727. That's text daddy, D-A-D-D-Y, to 72727. Or check us out on Facebook. We've got a lot of our events up there. We've actually got one of our coaching events tonight at Perry's Memorial City, 6:30. So if you can last minute make it, that would be great. Shoot us a text or hit us up on Facebook. And again, of course, our Facebook page is Big Money, Big Daddy. So lots changed, lots going to change. But one thing that will never change is the foundation and the principles at which we want to invest, so that at the end of the day, we can have that investing peace of mind. We want you to feel comfortable and confident and understand that there is a way to invest in the market to where you can get returns, you can understand the risk, and not have all this anxiety that seems to be associated with it. I don't know why people seem to fret so much over investing, because if you stick to these principles, it works, and it's not hard. Now, the obvious answer is I know why, because it's scary. You don't want to lose money. This is money you've been working very, very hard to earn, or money you're going to use for retirement or for your kids' college or very important things in your life. But again, if you stick to these core principles and you eliminate the myths to investing, which I just talked about, and you implement these solutions that I'm about to tell you, everything can be okay, everything can work, and not just in the short term, but long term. Investing peace of mind, that's what we want. So how do you get that? You've got to stick to the principles. So the core principles that I spent some time talking about, but I do want to iterate, are 7 of them. And the reason why there's 7 is because that's a good number. So here we go. 1, you want to own equities. You want to diversify, and you want to rebalance. Very foundational, right? If I want to make money in the market, I've got to be in the market. So I've got to own stocks, AKA equities, right? And you don't want to just own one. So you've got to diversify. And then when things change, you've got to rebalance. So at the end of the day, you want to own equities, diversify, and rebalance. That's core principle 1. Second principle is returns, as in the money you make comes from the market, not an individual. There is no advisor. There is no money manager. There is no book, software, individual, or anyone that generates the returns. The returns come from the market. They come from the consumer. They come from us buying and selling and growing our businesses and reinvesting them and working with people around the world. That's where the returns come from, the market, not an individual. Third core principle is free markets work. You know, if we believe returns come from the market, we have to trust that the market itself works, and it does. It's proven that free markets work, that over time, no matter who our president is, no matter what environment we're investing in, I like to use this year as an example. We had an oil crisis and Brexit, a European crisis, and then obviously the election, and all these crazy things that are supposed to be just devastating, right, and hurting us in a negative way. Look at the returns for the year. They're pretty good. Markets have been up, not only in the U.S., but overseas. So with that being said, free markets do work no matter what. Fourth principle is engineering matters, building a portfolio, and that's what I'm going to focus on right now. The right way matters. The math and the science will trump opinion all day, every day. Engineering matters. And then, of course, execution matters. You could have a great idea. You could have a great portfolio, but if you do not execute the correct way, you're done. It won't work. If markets start going down and you freak out and get out, that's poor execution. Then that well-engineered plan is done. So engineering matters and execution matters equally. Working with a coach matters. Working with somebody who's got your best interest in mind, who's not out there to sell products and make commissions or lean you one direction over one way or the other, but working with somebody who's got your best interest in mind, who he himself has success if you have success, right? He himself can get recognition if you have success. And working with a coach matters because he keeps that execution part in track, right? He makes it possible to have proper execution. So engineering matters, execution matters, and working with a coach matters. And when I say coach, that's kind of the loose term for a good financial advisor, someone who's got your best interest in mind, not the firm that he or she works for. And then the final principle, and to us, more importantly, a principle that should not only be a financial principle, but also a life principle, and that is hard, easy. The idea of practicing hard, easy is I want to do the hard things first so that it makes the rest of my life easy, right? If I do the hard things first today, the latter part of my years will be easy. And that's somewhat counterintuitive. A lot of people say if I've got 5 things to do, I'll do the 4 easy ones, and then I'll save the 5th one for last, right? So at least they get a big chunk of their day finished. But that just doesn't work. At the end of the day, hard, easy is the right way to approach not only investing, but really kind of everything in your life. So I'm giving you really good life advice here as well as investing advice. So with that being said, those are the core principles that we at Wealth Design Group, that we at Big Money, Big Daddy adhere to. So with that being said, what do we want to do, or what do we want to stay away from so that we can have the correct solutions? Well, I talked about it last time. You want to stay away from stock picking. You want to stay away from somebody or some mutual fund that thinks they know what stocks you should be invested in. You want to stay away from market timing, the idea that somebody or, again, some fund knows when you should be invested in this segment or when you should be in the market or when you should be out of the market. Nobody knows. And I bet if people were betting at, the night of the election when they showed that the futures market dropped 5%, that the market the next day was going to be down. And it was not. And you know why? Because no one knows. Market timing, it's impossible. Nobody knows. But what you do know is over time, markets do recover and markets give you positive rates of return. So focus on capturing those and have that long-term concept in mind. Track record investing does not work. So the idea that I'm going to work with a money manager because he had a good year or 2 years or 5 years, there's no correlation to that. There's a reason why there's a new money manager every year or a new fund every year, because a lot of them fall off and no one can consistently do it. Truth is, if one guy was consistently do it, we'd all invest with him, right? But I think, all of our listeners here, including myself, there is not that one guy we can say we point to who's the outsmarter of the market guy. Just doesn't work. And the fourth myth is the cost of investing, right? So what does it really cost to invest? A lot of it is kind of the funds that you own, but also the hidden costs, the turnover, right? The idea that when you buy and sell a stock, there is a hidden cost associated with that nobody's making but the market maker. But I want to make you aware of that. I want you to understand that, because that does erode away the growth inside your portfolio. So with that being said, if you stick to those philosophies that I was telling you about, if you stick to that investment understanding and those principles, and that is essentially eliminating the stock picking and the market timing and the track record investing and the cost of investing, then you can generate and create positive returns inside the portfolio. And that's what the solutions are. And that's what I'm going to share with you right now. The solutions to how do you capture positive rates of return in the market over time, no matter who our president is, no matter what's going on, et cetera, et cetera. With that being said, you're listening to Big Money, Big Daddy. This is Justin Makris. If you have any questions up to this point, you can call us at 713-826-0426. That's 713-826-0426. Or you can text DADDY to 72727. That's DADDY. You text that DADDY to 72727. Or check us out on Facebook, Big Money, Big Daddy. We'll post a lot of awesome information up there. We have coaching events every single month. In fact, we've got one tonight, Perry's Memorial City at 6:30, talking a little bit about, what I'm talking about today. The title of it is the American Dream Under Attack? So we'll talk about that tonight. So if you want to kind of last minute show up, that'd be great. Just shoot us a text or shoot us a note on Facebook, and we'd love to have you. So Principles, gloom and doom. Let's move past that. Let's end on a good note. Let's talk about the solutions. So at the end of the day, what we believe at Wealth Design Group, and it's not a secret, we're kind of pulling a lot of this from Nobel Prize winning ideas and the idea that there is math and science that proves this. So I wish I could take credit for it, but I can't. But it's 3 core philosophies. One I've already shared with you is, do free markets work? So what I've been saying this whole time is we as the consumer drive products in the market. That's what a free market works. It really says that supply and demand is what drives prices and drives actions, right? So I always give the example, if you're a coffee drinker and you go to your favorite coffee shop and they tell you it's going to be $350 for that cup of coffee, odds are you may not buy that cup of coffee. Now, I know some of us are going to be having rough mornings and we may make it happen, but most people would say, I can't consume that product at that price. It just doesn't make sense. Versus if you went into the coffee shop and it was a penny, well, yeah, you'd consume that all day, every day, but then the coffee shop's probably going out of business, right? So goods and services are already priced appropriately. All knowable information is already priced into the market. So there is no competitive advantage that one person can make over the other, right? There is no way to say that there isn't one individual who knows what stocks you should pick and when you should get in and when you should get out. Because at the end of the day, the returns don't come from that. The returns come from the markets themselves. And as long as there is a free market, and a free market is the United States and most of the rest of the world. I know there's pockets of the world that there's some crazy stuff going on. And yes, those don't have free markets, but most of Europe, most of South America, obviously the United States. I mean, there's places all over this world where free markets exist. And if they do, they need to be incorporated into your portfolio. They need to be incorporated into that principle I told you about, engineering matters, because at the end of the day, if you believe in the free market and you engineer a portfolio correctly, you will see positive returns in the market. So that's really kind of the first point. The second point that we use to build a better portfolio and what the solutions are is we use what's called modern portfolio theory. So modern portfolio theory is really just a Nobel Prize winning idea around the idea of, if you diversify into a lot of different asset classes, so large companies and small companies and value companies, if you diversify into those, you can engineer a portfolio that gets you the highest rate of return relative to risk. So kind of the father of modern portfolio theory is a gentleman named Harry Markowitz. So Google him, Harry Markowitz, modern portfolio theory. And what he did is he created an efficient model that shows that for every level of risk, meaning if you're willing to take a lot more risk, there's actually a return premium, a higher rate of return you should be receiving. And if you don't fall on that Markowitz efficient frontier, then there's inefficiency in your portfolio. There's improvements you can make. You're leaving return on the table. So at the end of the day, if you've never seen that or you don't know where your portfolio falls, please give us a call or shoot us a text or hit us up on Facebook. Again, this is Big Money, Big Daddy. Check us out on Facebook or text DADDY to 72727 and we'll help you with that. So the first component is free markets works. The second component is modern portfolio theory. And the third component is the 3-factor model. That's another Nobel Prize winning idea. 2 guys named Eugene Fama and Kenneth French worked on this. And Fama actually won a Nobel Prize for this as well. So you can see our investment philosophy is not anything we thought of. We just kind of stole the math and science from these really, really smart guys and turned it into a portfolio. So with that being said, and his philosophy was, there are so many different asset classes out there, right? And some of them, and what I mean by asset class is large cap, S&P's an asset class, or small cap, Russell 2000's an asset class. And some of them pay you a higher return and some don't. So the ones that don't, relative to risk, you shouldn't invest in, and the ones that do, you should. So then what I'm talking about now is this comes back to that engineering, right? Those concepts that I said of engineering matters, execution matters, and working with a coach matters, because if you implement the concept that free markets work and you use modern portfolio theory, which is just diversification, and you diversify based on the correct asset classes, large stocks, small stocks, value stocks, then you can build a better portfolio. You can put yourself in a strong financial situation where you will capture market rates of return all the time. And market rates of returns, by the way, are unbelievable. I talked about it earlier in the show. Dalbar is a company that does research, and they studied over the past 30 years that the market measured by the S&P is up 11%, averaged 11% over the past 30 years. And if you haven't been seeing that or anywhere close to that, then you should give us a call. I mean, there's an issue there. You know, at the end of the day, if you're not capturing positive returns in the market, then I don't think your portfolio is engineered correctly. So again, really what I want to focus on today is, one, we got a week to go for Thanksgiving. That's going to be awesome. But two is, no matter what's going on in the future, no matter what the circumstances and situations are, understand that if you stick to the core principles that I've talked about, owning equities, diversifying and rebalancing, et cetera, you will be happy and you will have a strong portfolio. And if you want any help with that and you have any questions, hit us up on Facebook, Big Money, Big Daddy. Text DADDY, D-A-D-D-Y, to 72727 or call us at 713-826-0426. I hope everyone has a great day. And again, Big Money, Big Daddy.
I've had enough of scheming and messing around with jerks. My car is parked outside, I'm afraid it doesn't work. I'm looking for a partner, someone who gets things fixed. Ask yourself this question, do you want to be rich? I've got the brains, you've got the looks. Let's make lots of money. You've got the brawn, I've got the brain. Let's make lots of money. You got the brawn, you got the brain. You want money. You can tell I'm educated.
Hypothetical examples discussed are not intended to suggest a course of action or represent the performance of any product or security. All investments contain risk and may lose value. Past performance is not a guarantee of future results. Diversification does not guarantee profit or protect against market loss. Investing in foreign securities may involve heightened risk, including currency fluctuations, less liquid trading markets, greater price volatility, political and economic instability, less publicly available information, and changes in tax or currency laws. Such risk may be enhanced in emerging markets. The S&P 500 index is generally considered representative of the stock market as a whole. It, however, focuses on the large cap segment of the U.S. market. Indexes are unmanaged and you cannot invest directly in an index. Wealth Design Group does not give tax or legal advice. Anything mentioned in the show related to these items is not advice, and you must check with your CPA or attorney prior to taking action. Securities